Well, good evening, everyone. Welcome back to the channel. So we're back here on Streamlabs this evening because I'm going to do a live Discord show, or at least attempt it. So I am live in the Discord voice chat. Let me pull that up right now. Okay, so I'm live there. I've got the comments up here on screen so I can see both. And here we go. Okay, so I started the stream out in StreamYard, but I switched over to Streamlabs since I'm going to be live on Discord. And for those of you that would like to join the voice chat, it is the bottom left live show. You just click it. As long as you have a microphone, you go live with me, and we chat live over voice chat. So it's pretty cool. Welcome, Richard King. Welcome, Mr. Varden. Haven't seen you on in a while. Mr. Cardona, welcome. Okay, so I'm starting to get a lot of comments here. So I haven't covered Yieldmax in almost a week. I know I'm starting to have withdrawals, right? As is some of you, or as are some of you, right? So a couple of the comments I've been getting have been interesting. I've got some commenters saying, "Oh wow, you just think all Yieldmax is crap now because of Tesla and OARK." No, again, I'll reiterate. Out of the 22 funds, 17 of them are positive in terms of total return, whereas 5 of them or so are in the red in terms of total return. But for the most part, at least the single ticker ones, from what we've seen, and these are just facts, I'm not stating opinion, but they tend to underperform the index. So we'll cover all of that. We'll recap Roundhill, we'll recap, rec shares, FETB, all of that stuff. And hopefully if I get some good questions and some good comments, I will take your questions and answer them live. Richard King says Yieldmax or barbarism. That's always the other choice. It's either, like before it was capitalism or barbarism. Now it's Yieldmax or barbarism. That's always the other choice. Or life. Why is life the other choice, Varden? You gotta clarify that one. We need some context there. Okay, so if you all haven't heard, we are having on Roundhill next week. At least that's what we're scheduled for. So submit your questions for Roundhill Investments in the thread there. And we'll definitely ask them directly to the fund manager. So as far as options, had one good trade today. Tesla made like $300 on a call option with Tesla, so that's always good. Offset some of those Tesla losses. Let me do this here. Let me do a message in the Discord here. Okay, I'm gonna send it to everybody. Solicit some participation here, right? Okay, so Seeking Alpha, we'll just do this live here. Also, I believe Crane Shares paid out their dividend today. What is it, Clip? So we'll review that one first for anybody that's interested in Clip. Welcome. Let's see, a dissector. Yeah, welcome. Did you see the RH News best broker out there? Oh, Robinhood. All right. Who has entered the live zone? Let me see. Who do we have? We've got Danny. Go ahead and unmute your mic and talk to us. You just got to click unmute and then you'll be able to speak. While you're figuring that out, I'll continue. Let's see here. Robinhood News. Oops. The gold card. Robinhood ventures further beyond trading with new credit card. Ooh, interesting. I haven't done a credit card promo in quite some time. How's it coming there, Danny? Did you figure out how to unmute your mic? I guess I'll hear you when you do. Anyway, let me continue. All right, so Robinhood, gold card. Let's pull up one of our favorites. Actually, one of Varden's favorites, Yahoo Finance, right? Can you believe, like a year later, I'm still using it? Ooh, 1% match for every deposit. Ooh, that's juicy. I may be moving some money over there. All right, let's see. 1% match. That's like an extra match. So you have like 401k match and then Robinhood match now. Introduces an IRA. Ah, so the card. I may open the card too because I like my free monies for sure. So for those of you that don't know, I actually credit card churn, and That's come in handy for a while. Of course, I haven't been doing it as much. I know, isn't it crazy, Varden? I'm still, after a year, you were telling me a year ago to quit using Yahoo. I saw the Hood presentation today. There was a Hood presentation? That's interesting. Okay, so the IRAs will match your contributions, but is this like a Roth IRA or like a traditional? Let's see, contribution matching is common for workplace 401k accounts. Well, that's good because when I retire, I can still get matching from Robinhood then when I retire, like in a year, right? That's my plan. Saving for retirement isn't a sprint or even a marathon, it's an odyssey. How about that? Ooh, 3% on Roth. I gotta move my Roth over there then. Damn, that's pretty good. Okay, so Dissector, where's the best article then? I realize that now, July 30th. I'm not even paying attention. Alright, so someone did try to join the voice chat, but they haven't, oh, he commented here. Let me read what he said here. It's not letting me. I'll join you live with a voice different night till I figure this out. All you gotta do, if you have like a mic, or if you have like a headset, just press unmute. Some people, on their first or second attempt, they do have some trouble with it, but you'll get there. I know you will. You just got to unmute. Anyway, Hood stock. Well, let's look at Hood stock for sure. So today, this morning, I actually had a, how could I say this, like a pre-interview session with another fund manager that's in the works to come on. He's with Simplify, so that's the SVOL folks. They were talking about another fund they might want to talk about. Ticker symbol is, get this one, HIGH, high. And it has nothing to do with what you might think it has to do with. It's actually like a treasury fund, because I could have sworn it had something to do with the green stuff, but he said it didn't. Okay, anyway, let's see. Let's look up Hood stock. 1928. Ooh, we had a bounce today. I just heard another ding. Somebody, okay, we have Even Steven on the voice chat. Feel free to unmute your mic. Oh, good, Dissector's coaching people up here too. That's good. So yeah, go ahead, unmute your mic, and I'll hear you when you do. All right, so Yahoo. So here's what, if we got the whole history of the stock over here. I'm on the desktop, which should be, purpose is awesome. What is this? What does that mean? Orion says, I'm new to the channel. Are you planning on a live dividends when you retire soon? Sort of. So here's the thing. I guess I'm kind of in the middle of a little bit of a pivot on the channel. I've been covering a lot of high yield dividend investing. I still hold a lot of those, but like I've always said from the beginning, I would say 10 to 20% of the portfolio, no more. Yeah, here's Robinhood when it first went public in 2021. It's still way down from there. Oh, purpose ETFs. I thought you were making another like something that you would read on like a fortune cookie or something. I thought it was like a saying or something. Anyway, okay, so ignore 2021. Since the beginning of the year, we're up like $7 in Robinhood. So that's pretty cool. Let me finish my last train of thought though. Oh, dividends. Okay, so dividends, yeah, they're cool and all, but like look at NVIDIA versus NVDY, which is like the best Yieldmax one. We're up 120% in total. In the same time frame, NVIDIA stock is up like 250%, so it's double the return. And all you got to do, really, if you want the income, just sell shares of the stock. And here's the thing: if you held that stock over a year, this is another thing that YouTubers don't really talk about. There's a different tax treatment. Okay, so whereas dividends are taxed as ordinary income, the stock, when you sell it, if you've held it over a year, it's what they call a long-term capital gain, meaning 15%. So it's less than ordinary income. If you all are in, a super high tax bracket, which I assume some of you are, you're going to be paying a lot more in ordinary income. Anyway, yeah. So Varden, if you can private message me, send me that information. I'll try to reach out to them. What does Mr. Ollinger say here? I don't think any high yield covered call fund is beating their parent underlying, and really they won't. That's the thing. Let's see, Meet Cranium with the flex there. QDTE and XDTE opinions. Oh, did you just find me? I've seen you on here before. By the way, feel free to join the live chat in the Discord. We got a couple of you on, but I think you're not able to unmute your mics. So here's the thing, Meat Cranium. So I just covered these the past like couple days. I like them. They're weekly, but I don't think the dividends, or to kind of get ahead of myself here and read Dissector's comment, do I agree with fiscal philosophy that Yieldmax doesn't pay dividends, they pay premium? So technically all of these are premium. Yes, I agreed, and I agreed with him on the live show. Yes, I say dividends, but they're premium. I think dividends are just a better way for the audience to understand. But it is premium, absolutely. So I do agree with that statement 100%. Oh, you're saying just join in conversation. Okay. I like the strategy QDTE, XDTE employs, but SPY and QQQ have such low premium. Yeah. Oh, good. Even Varden agrees with you, so that's good. What is this? Chat GPT. Hog Farmer, fun fact. If you were to win the Mega Millions tonight and dump it all in Coney, and I can't, it's weird, I can't read this because there's like a heart here. Coney and Coney pays 150, you get 26 million per month. That's if the dividend holds. So I do, if you all watch my short videos, I do crazy scenarios like that I consider like a textbook example. So a good example, like the Roundhill, was it Roundhill, the YBTC, the Bitcoin fund? So it paid $4.13 today. So if you annualize that, like that's like an 87%. So what I'll do in some of these short videos I'll do an example like that. It's unrealistic, but it's like technically a textbook example, holding all else equal. If you could buy only one stock for the rest of the year, what stock would you choose? No ETF. God, one stock. Well, if I could time travel a year, the answer would absolutely be NVIDIA. That's a tough one. Not Tesla. One stock. Well, so many of those Mag 7s are expensive, but honestly, I think you could go with any of those, and there's going to be appreciation next year. Like, regardless of what happens, like every year after an election year, the market tends to go up. So I think if the market has like a 30 or 40% run, and most of the indexes, a lot of these Mag 7s are going to keep rolling. So yeah, I could see Google being a good play. NVIDIA, I was waiting for a pullback, but it looks like that one's not to be had. How's that semiconductor one doing, by the way? Or SMCI, not semiconductor, but SMCI. Let me do this here. I'm on Robinhood. Let me see. Robinhood. So, year over year, we're up 124%. Who would have thought? I haven't even been following this, but yeah, 124% for the year. SOXL is a good leveraged semiconductor one. Yeah, that's true. That's true. By the way, so I've reached out to the Direction people. We'll see what happens there, but I'd like to get them on too as well. Okay, so that's Robinhood. Let me look at that SMCI one. I haven't been following it in a while because I was really just getting FOMO checking it out. Okay, it's down to like $1,000 a share, and let's see what it's doing. It's been since like March 12th. It came down from here to here. It fluctuates a lot. I don't know if I want to throw a lot at it right now, though. RSPN Air, what is that? Let's see. Term is they pay a distribution, which generally is taxed as income, not actual dividend, but they should still do account towards a loan if you need to provide proof sources of income. Well, that's what that other channel does, because he talked about how he was making a lot trading. He was like a swing trader, and he couldn't get a mortgage, so he started doing dividend income so that because that would count towards a loan, or so I heard. Okay, let's see. So we had, I guess, Even Steven left. You guys got to get this together, man. Other Discords are able to do this. So, hey, Mr. Music Man, Mike Johnson, are you able to join the live? I'm sure you've done this in other ones before. Anyway, we're going to keep doing this. It's going to take a month or two, I would say, for things to really get going. Part of it also, I don't schedule it. I just announce it like 30 minutes before. Do you think doing your own weekly covered calls is a good idea for retirement income? Absolutely. So let me show you guys again, not to plug the Discord, but that is kind of what we're doing. There's a sub-thread here in the Discord called the Wheel Strategy. So right now we have some folks that are doing this very well. And it's not just weekly covered calls, it is cash secured puts. So these guys are very transparent about their trades. They're making a lot. See, they did some plays on DWAC yesterday, which is now DJT. These are literally all the trades they made. They're making like between like 3 and 5,000 a week on this. See this here? This is somebody's results last week. It's like more than you earn on a job. So yeah, I think it's absolutely great. Do you need lots of capital to do the wheel? It depends on what options level you're approved for. It gets a little scary for me because I'm thinking about elevating my options level again. I was having this conversation with Blake actually. If I elevate it to like the top level, then I could do these with less capital. But the thing is, the risk is more because you risk getting assigned. Like on Mara, for example. Which, check this out here. This guy, he did a Mara trade. So last week, this was one I did as well, and I closed it out for a nice gain. Didn't do all of these though, because at the options level I'm at right now, I'm waiting for you to say coach is a dog one day. But I agree with you on most of your assessments. Yeah, Blake is awesome. Anyway, so last week on Marathon, I closed it out for a gain because we had the Fed announcement. But at the options level I'm at right now, I'm not able to do all of these trades without having more capital that's not deployed into other stocks. So that's the thing. Mr. Varden asks, when is Blake coming on? So we do our separate podcast. I don't know if you've seen that or not. He pops on the voice chat every now and then, but we've been mainly sticking to the podcast for now, which we're going to be filming. We got a lot next week, actually. I don't know if we're doing one this week, but we've got a lot next week. We need to probably get on a regular schedule again. Anyway, let's see. Oh, and the other person left. Oh, well. Do you have a favorite stock you like to do covered calls on? Well, there are some that are better. Like, typically, Apple has been a good one because it doesn't fluctuate a lot. Oh, here comes Even Steven again. Looks like he's got a headset now because it shows like a headset icon. Most high implied volatility stocks going to have a 50%. Oh, and he left. Oh, well. Most highly implied volatility stocks going to have a 50% maintenance requirement just to hold the shares long. Yeah, that's true. Mike Johnson here says, I did really well last year doing covered calls on Palantir. Yeah, Palantir is actually coming back up too. No, you might have him deafened somehow. Deafened? How? Or he deafened himself? Oh, that's not good. That's no fun. Let's see. What was I going to look up? Oh, Apple. Let's look up Apple, how they're doing. Let's see, 169. Dang, Apple. See, this is what I'm talking about. Apple stayed flat. I bought some Apple a couple weeks ago, and since like the beginning of the month, okay, they've gone down $5. So that's great for a covered call. If you got a covered call with like a $180 strike price, this would have expired worthless every week for the last like 4 weeks. Since what, February? See that? Yeah, you would be in business there since February 15th. You could have made premium 5 weeks in a row on that expiring worthless. Let's see, can you compare your growth ETFs in your portfolio versus Yieldmax funds year to date? I absolutely will, yes. And I think you probably know the answer to that already. It's going to be the growth funds that win in the long term. So yeah. I heard income is all that matters. Oh yeah, I hear rumblings out there about that too. That's definitely interesting. But yeah, you've got growth and income. I think growth wins in the long run. And yeah, of course, Varden disagrees that income is all that matters. That's good to know. We knew that already, but I'm glad we confirmed that. Anyway, let's see. Let me go back here. Oh, Crane shares. God, that sucks from the last year. But the dividends, right? They pay dividends. Okay, I've got the symbol select here. Let me do this here. Select metrics, performance, profitability, total return. Oh, I see. Even Steven says that he's got his 3-year-old daughter and it's probably noisy. Okay, no problem. Okay, so clip total return is positive. Oh, look at that, it's positive if you've reinvested dividends. But I want to point out, okay, so even with the dividends reinvested, you're still far, far underperforming the S&P 500. You see that? I'm not trying to take a crap on dividends, but it far underperforms the S&P 500. See, I'm moving my cursor in a circle here, so you all really focus on that. Clip went down 4% after dividend, no good. Yeah, I don't know why I bought it, honestly. But look here, some of you might point to, it was tracking with the S&P here in November. See that? There are times that it's close. But anyway, yeah, dividends, I think it was like 61 cents. See, I like these scorecards, which I'm going to work on some of my own, which we did start doing actually for some of these ETFs. The scorecards, see, it gets an A plus for dividend and dividend growth, but F, consecutive years of dividend growth and dividend payments. Risk D plus, dividends A plus, liquidity B, momentum and expenses D minus. This is strange though. Okay, so the Seeking Alpha analysts rank at a strong buy. The quant ranks at a strong sell. Oh, this is what you were talking about, Dissector. Quant, right? I do have access to Morningstar reports. Keep in mind, also have access to very highly advanced financial forecasting equipment. So I do have access to a lot of different sources, but right now I would have to log into my account, and I'm not going to do that live, but I definitely, I've got S&P, well, they used to be called S&P reports. They've changed names like 5 times, but those are somewhere. I can access those. Morningstar is on one of the brokers. I can certainly do that, and I can have that ready. Why aren't there any wheel strategy ETFs out there? Good question. I knew you were going to bring up quant, Dissector. That's why I was trying to pull this up here. I think I probably agree with the quant more so than what the analysts say. You should look at the top stocks on SA. Where do I go for that? So I have premium, but I don't have like the stock picks or like the alpha picks. Oh, this one, top stocks. Does it? Oh, I've looked at this before actually. FNMA. I was actually in this one before. FNMA. That's interesting. New Lake Capital Partners. General Motors. Honda. PagSeguro. Limbach, Easy Core, Bluebird. Let's see. These have, I see lots of green. These have lots of good grades here. Some of these I've never heard of. Par Pacific, Credit Core, TK. I also have bar charts too, premium bar charts. Let me go to that actually. Bar charts. Let me see, I'm probably going to have to sign. Oh, this is so stupid. There's 2 bar charts. There's bar charts for like study guides, and there's bar charts for actual like financial stuff. Let's see here. Let me pull this one up here. The bar charts covered call screener. Oh, good. I'm still signed in. Perfect. Okay. Let's see here. So they have a bunch of different screeners. They have option screeners, most active options. Look at 25 on the top stocks, and I'm going to find a Yieldmax fund, right? I'm just kidding. Yieldmax isn't even a stock. I know that. Let's go back to Seeking Alpha here. Look at number 25. Haitai, yes! I don't know if Blake knows that. I'll have to point that out to him, actually. Haitai. Well, more validation for Haitai, right? That's really cool. What other companies do I recognize on here? Arcos Dorados, DNow, Expedia Group. That's interesting. How about that? I didn't even realize that. That's cool. I want to start writing for these people too. How about top ETFs? I know we're going to find Tesla up here, right? Not Van Eck. I bet we'll find a lot of growth ones up here. Now look at this. They have this rated an F in one category and an A plus in another, but they've got it number 1. BitQ. Oh, these are all crypto. Oh, Beto. I have Beto. And then here's the Grayscale Bitcoin, a blockchain one, Van Eck Semiconductor one, the SMH. I've heard a lot of good things about this. Can you look at $4, look at the valuation metrics and such? I'm adding a bit into it. Let's see, 4. Let's see. Well, before I do that, I have to make sure, is 4 a good stock? If it says yes, then I'll look at it. If it doesn't say yes, oh, it says my reply is no. But that's okay. I can keep shaking it till I get the answer I want. Let's see. Now it says yes. Now I got a yes. Perfect. Perfect. Now I can go look at it. Okay, where was it? Let's see, $4. Only if you admit that I'm a dog, too. 4-star group. Ooh, strong buy. Even the quant has it a strong buy. C- for profitability, but it's got A's in all the other categories. Max, let's see. Since 2017. Looks pretty stable. Market cap 1.84 billion. Let's see here. Home builders are primed for a strong 2024. So this will be a good play then when interest rates start to come down too. Let's see here. Financials. Let's see what I see here. Trailing 12 months. Okay, I see some growth, but revenue growth fell in 2023. Why is this like based on the third quarter? Let me see. Let me do it by quarter. There we go. Now we have December. Okay, so there's quarterly total revenues, gross profit, net income. Let me look at the cash flow, my favorite one. Okay, let's see. Ooh, cash flow from operations took a hit. Let's see. Where's our bottom line here? Alright, let's see who else has entered the arena here. Oh, Danny's trying again.
Oh,
There you are. Alright, it works now.
can you hear me?
I hear you loud and clear.
All right, sounds good.
Awesome. So what's on your mind today during the live show?
Oh, not much.
Yeah?
I really enjoy listening to you talk and break down stocks and dividends, and yeah, that's why I'm here.
Awesome, cool. How long have you been subscribed to the channel?
I've been watching you for about 3 months.
Oh, cool. Awesome. Well, glad to have you. Are you a dividend investor, growth investor?
You know what? I was a dividend investor up until about November, until I wanted to buy a full Bitcoin.
Okay.
So I own a full Bitcoin, and I just started. Uh, yeah, I guess I just started buying some more dividend stocks
Oh,
again.
okay. Yeah, I have a little bit of Bitcoin directly, but I really play it indirectly, like with Beto, funds like that,
Okay,
and it pays a dividend too. Yeah,
nice.
this one's really been kicking butt since a year ago.
Yeah, I do have my eye on that. Which one? YBTC.
Yeah. So the thing with that one, I covered that one earlier today. That paid like a $4.13 dividend. But
I saw.
I doubt that it's gonna always be that. That's the
I
thing.
agree.
Yep. But the dividend has
Yeah,
grown.
I,
Yeah.
I really like the JET-B, the JET-Qs. I got my
Hmm.
eye on FETB,
Yeah, I like
and
FEPE a
yeah, that's
lot.
basically it right now.
Yep. Yeah, FEPE is probably one of the best ones from what I've seen.
It looks like it.
Yep. Anyway, well, glad to have you on. I'm gonna continue here. Let's see. We were
Thank you,
looking at.
Coach.
Yeah, absolutely. Thank you. Okay, 4-star group was, let's see, over a year it's up 148%. EPS 3.68. Market cap, oh, I read that one already. PE is only a 10. Let me go back to Seeking Alpha over here. We've got, let's see this tab over here. Okay. The format on here is a little bit different. That's why I'm usually using Yahoo. Let me just go to it on Yahoo here. I'm looking for like the bottom line here. FOR. 4-star group. Okay, these. Oh, that's something different there. Okay. 5-year return, 3-year return, 1 year, year to date. It's beating the S&P. Look at that. In all of these, it's beating the S&P. That's really cool. 1 year target estimate 41.33, so their analysts suggest it's undervalued. As far as statements, let's see here, financials, cash flow. Yeah, free cash flow is positive since, let's see, year over year. It actually more than tripled from 2022 to 2023. You see this one? This is almost a 4x in free cash flow. So this looks really good here. Why is the price to earnings so low? Well, in simple terms, they are earning enough compared to their price. That's how the ratio works, but let's delve into that one further. So let's see here. Earnings per share is 3.68, like I said. So all PE is, it's really the price divided by earnings, right? So we've got 37.09 divided by 3.68. That should be, yeah, that's our 10.08. See that? So yeah, that's lower than, so say if this had the same PE as like Meta. Let's have some fun with this one here. So yeah, that definitely suggests that this is potentially undervalued, or it could potentially be a lot higher, because if it starts getting more broad exposure and having more, start going up. Like if we look at the PE for, say, Meta, okay? So if it had the same PE as Meta, which is 33, let's see, what do we say? It was a 10? So to get a PE of 33, let's see here. If the price was $100 a share, we would have a PE of 27. So if the price was like 125, we would have a PE of 34. So there. So the price, if the PE was the same as Meta, the price would be like 125. So yeah, I definitely think, yeah, lower PE definitely suggests that this is either a great buy or even undervalued. And Yahoo's own analysts, they have the 1 year target estimate at 41.33. Let me look at earnings over here. Let's see. They've moved things around on me. Here we go. They're beating earnings the last 3 quarters. Earnings are coming up in April. I might do some leaps on this one, actually. This is a good one, Dissector. I might do some leaps on this one. Okay, let's look at some other ratios here. Price to book. Wow, I like this. This is low. Price to sales. Low. Enterprise value and market cap. We could get into the differences on that later. Trailing PE. So the PE, I think, has gone down, actually. Interesting. Enterprise value to revenue, enterprise value to EBITDA, levered free cash flow, total debt to equity. I like this one. Do you do hours of research before buying stock? I don't know if I would say hours. I do research, but I don't know if I do hours. How about you? You just watch the coach, right? No, I'm just kidding. I know you watch a lot of stuff. Yeah, I definitely, I like doing this. If I make this like a full-time thing, I would put even more time into it for sure. I think I could make some leaps plays on this one here. Let's see here, company profile. It's so funny. See, I was supposed to talk about Yieldmax on this one. Well, I talked briefly about it. I don't need to keep beating a dead horse, but I already said what I had to say. Let's see here. Here's their executives. 4-Star Group Inc. operates a residential lot development company in the U.S. The company acquires land and develops infrastructure for single family. So I can tell you right now, this will boom when interest rates start to get cut. When mortgage rates fall, this one's going to boom. This one could be a great play. Let me look at the life of this one here. Let's see here. Do they do buybacks or anything? Let me check that out. Good question. That's the technical chart there. For those that don't think I do any technical analysis, look at these indicators I have. I've got Bollinger Bands. I've got simple moving average. I've got MACD. I've got RSI. Anyway, let me go back to summary over here. Let me look at a simple chart. Let's see here. Simple chart, come on. Don't freeze up on me now. How do I get this darn chat window. I want this chat window to be pop out. Here we go. I think I did this before. All right, I popped out the chat. Perfect. There we go. Now I've got the whole chat window over here. Okay, let me refresh this page. Here we go. Since 2009, so this company's been around apparently since like 2007. The low point that it got to was $4.63. Then it came back from there. And then it hit its most recent low, September of 2022, and then went up from there. Let me look at the financials over here. Basic shares, diluted shares, diluted EPS, basic EPS. Let's see something here. Normalized income. It went up and then it went down a little bit. Then the trailing 12 months is up. Let's see here. Give me a second. Feel free, anyone that wants to join the live voice chat, feel free. We had one so far that successfully participated. Okay, let's see. I'm actually pulling up another site. I'm going to go to ycharts.com. Let me do this over here. ycharts.com. Going deeper into the playbook here. Okay, let's see here. I should be able to use this for free. ycharts.com. Come on. I have it up on my phone over here. Let me do this here. There's some stuff. Here we go. I don't know why it wasn't coming up for me before. Okay, so this one has some different information that I like. Oh, see, it is behind a paywall. Look at their debt to equity. That's another one. There's another ratio called the WACC, weighted average cost of capital. Let's see, PE ratio. This one has it at a 10.10. Let me see something here. I believe they do buybacks quarterly. In fact, yeah, the last buybacks, it looks like we're in December. Yeah, I think every quarter they're doing some buybacks, which that should help the share price. Let's see, 2023, 2022. Yeah, it looks like every quarter since the data goes until like 2011. No, I'm sorry, not every quarter. They didn't do it in 2018, it looks like, from what I can see. Let's see here, best sector to invest in for growth ETFs. I like, as far as sector, I like financials, I like tech. Of course, I like the caps. I like large cap, I like small caps too, Russell 2000. I like the Qs, S&P, of course. Speaking of technical analysis, do you understand how or why the fibs seem to be so frequently accurate? That's something I want to look into further, the Fibonacci's, honestly. You all are throwing some hardballs at me tonight here. But yeah, no, that's definitely, I have so many books here that I'd like to read, and this will all come when I retire early. Not on Yieldmax dividends, but, maybe on a combination. The Fibonacci. Well, for other channels, it's fibs, as in like fibbing, but no, Fibonacci. So I have this book, the big book of chart patterns and of candlestick charts, and they're part of my stack of books here to read. But yeah, the Fibonacci's definitely do seem to be accurate. I agree with that for sure. Technical analysis is just not my forte at the moment, but it's something that I definitely want to get better at for sure. Let me see if I can, let's see here. Let me see something here. Technical. Yeah, so it's basically, the support and resistance levels. They've named it after the Fibonacci sequence of numbers, whose ratios provide price levels to which markets tend to retrace a portion of a move before a trend continues in the original direction. So yeah, no, I agree. From what I've studied about Fibonacci's, they are accurate, but it's something I definitely could probably do eventually a separate live stream just on technical analysis. PH versus Eli Lilly, which one would you guys choose for long-term investing? Let me look up PH since you keep mentioning it. Let's see here. Don't you guys like this? We're not talking about Yieldmax. I went for a whole week without talking about Yieldmax, actually. And the channel sustained itself. That's impressive. Parker Hannafin. Haven't you mentioned this one before? Parker Hannafin over the last year. Here's another good one, up 70%. PE 27%, market cap 70 billion. Wow. And it pays a dividend. Earnings per share is a 20, beta is 1.5. Let me look at Eli Lilly really quick. Eli Lilly's more expensive, up 131%. Wow, last year was such a great year for investing. It pays a lower dividend. Just off price right now, I would probably... Well, Parker Hannafin's pretty expensive too, but you can get fractional shares. This one was up more. Wait a minute, no, Eli Lilly was up more. I guess I'd have to go with Eli Lilly. Let me see. Should I go with Eli Lilly? My sources say no. What sources can the advanced equipment have here? Ask again later. Oh, it must be tired. I'm wearing it out. Industrial versus healthcare, like the power of 3. Let's see. Oh, this is becoming a good discussion. We're getting into growth stuff here, right? CAH. Oh, Cardinal Health. I was just talking about this the other day, actually. Cardinal Health is up 56%. I like them because when I moved, I actually had some boxes from Cardinal Health. So that's like my personal connection to the company. Don't remember how I got them, but I remember the boxes said Cardinal Health. They pay a 1.8% dividend. Over the last 2 years, 93%. Since 2020, 131%. No, that's certainly a good one too. Let me pull up. Let me see. I'll go back to Seeking Alpha. Let me pull up. We'll just have a growth stock session here. CAH. Let's see. We got 111. Strong buy. Look, the quants and the SA both a buy and a strong buy. C plus for valuation. Maybe it's slightly overvalued, but I think with a company like this, that's okay. Let's see. Financials. Here's the revenues. Seem to be inching up. Actually, they dropped a little bit in the last quarter of last year. Total revenues. Ooh, CrowdStrike. That one, actually, I think that was at the top of one of the screeners that I was using. It popped to 360 a few weeks ago after earning, but has been trading. Aren't you all starting to feel like with all these growth stocks doing so well, we've been kind of wasting our time on dividend stuff? I get that feeling. Between 310 and 330, analysts all increased price target after that report. Yes, CRWD. No, that's a good one. That's one I've certainly been following too. Just not close enough. Let me see. I heard a little beep in the Discord here. How long are you staying on? I'll be on for a good while. I don't know. How long do you guys think? 15 to 20 minutes? 15 minutes or so. Yeah, we'll get there eventually. I'm going to start scheduling these eventually. What do you guys think? Should I I had a rather interesting thought. I thought about doing it exactly the same time as another channel does it, or at a different time. What do you guys vote? Should I do it at exactly the same time, or at a different time? I don't think it matters, because if you have different audience, it shouldn't matter. Final thoughts on 4. I thought it was good. I thought I told you. Friday night with the coach. Well, sometimes it's tricky for me to commit to a time because I'm doing other stuff sometimes, so it's tricky to commit to a time. Sometimes it's easier for me just to pop on. But yeah, let's see if the 8-ball agrees. Is 4 good? It is certain. There we go. Well, I already thought it was anyway. Okay. What do we got here? Same is fine. Oh, you like the same time. I had a sneaking suspicion some of you might say same time. Well, we can try that and see how it goes. Friday night pickleball. That would be fun. I actually play pickleball. I played it last Wednesday. And that would be fun if I could do a live stream while I'm doing that. Burn some calories and live stream. That would definitely be a winner for sure. Do you think Coney is a good guy? Yeah, of course. I mean, we had him on the podcast. Yeah. Why wouldn't I? It took me a little while to get what his name meant. I thought, because there's the Coney fund, the Yieldmax fund, one of your favorites, right? Ever look at commodities, natural gas? By the way, thanks for bringing that up, because I'm starting to notice the price at the pump is going up a lot. We're up like 70 cents. So crude oil, let's see, what did you say? Natural gas is at price levels back to the 90s, all-time lows. Probably. I'm surprised, actually, we don't do more with natural gas, energy-wise. Let's see. Varden is gushing over the Gush ETF, apparently. You knew I had to make that joke. Let's see. Oh, look, Marathon Digital Holdings. Okay, let me look up, let's see, crude oil first. Crude oil. How am I doing on my answers to all the questions, by the way? Oh, I see what you guys are doing. You don't want me to talk about Yieldmax, so you're bombarding me with all these other tickers. That's okay. We can not say any more about Yieldmax, at least for tonight. But like I say, if I could sustain like the last week, going a week without Yieldmax, and sustain the same levels, I'll get away from it. Oh, thank you. Okay, so Music Man thinks I'm doing great. That's good to know. It's more fun, absolutely, yeah. Well, Orion's really blowing up the chat here. Let's see. Oh yeah, crude oil. Here's what I want to know, because the price of the pump always seems to jump up fast. We've only gone up $10 a month on crude oil. So Varden, okay, why do you say better broadcast with Yieldmax? Dissector says stock analysis more fun. I tend to agree. But what's this about better broadcast with Yieldmax? What, you think it was better with that? This will be a lot more fun. Oh, without. Ah, okay, it was a typo on your part. I can tell you guys, this will be a lot more fun when we get good participation in the live chat. This will be a lot more fun. What matters most in a company to you? I'm trying to learn valuation and growth metrics and such. Well, I was saying, for one thing, it's got to have a cool ticker symbol. It's got to have a cool name. Stuff like that. Just kidding a bit. I know you already probably know that joke by now. What matters most to me, I would say like the product, the business model, like NVIDIA. You see them, like their chips are in everything. Like I can literally go to Costco, I can see their chips, like in everything. So yeah, the business model. Oh, Coney is on. Welcome.
How you doing, Coach?
Good. How are you?
Very good. What are you talking about?
Oh, we're just talking about growth stocks, actually, instead of dividends. Yeah.
Oh. Well, I don't talk about that kind of stuff.
Not growth. You're only income, right?
Yeah, 100% income all the way through. Well, I mean, preach the same old story that income is just a natural consequence of, focusing on total return. Eventually, making cash flow is very easy after that. But
Right.
yeah. No one wants to hear that. So.
Exactly.
What kind of growth stocks you talking about?
We went over, so Dissector pointed out a lot of good ones. We went over FOR. That one, yeah, that's one I like. We went over Cardinal Health. I think the audience is so tired of Yieldmax, they're just bombarding me with like other tickers to cover.
Oh, I mean, there's so many. FOR I've never looked at, actually.
Yeah.
What is this? Cardinal Health is an old investment of mine. I invested in that one back in Q4 of 2021. And that's actually one of my good performers in 2022. Catalyst, by the way, for context, if people want to know the history behind those, is they went through the opioid epidemic, and the lawsuit was settled in late 2021. And so basically at that point you had a business for like 5 years that went nowhere, and the market doesn't like uncertainty. So the discount was implying that uncertainty, and then after that uncertainty was removed, all of the drug distributors, Cardinal Health, AmerisourceBergen, and McKesson all actually did really well. I actually didn't pick the best one. If I could go back in time, I would pick McKesson of the three, but Cardinal Health did good. So.
Interesting. Yeah. So McKesson, and then you said AmerisourceBergen. That one.
Yeah. They changed their name, but ticker symbol was ABC.
Mm-hmm. Oh, that's right. Yeah, I remember looking at them before. Yeah.
They have a ownership stake. I think Walgreens is selling it off to pay off debt, but yeah, they used to have a lot more ownership from Walgreens.
Oh, okay. Do you like
The
Walgreens
audience, I
stock
think, is
too?
saying to boost. No, but wait, the audience is saying to boost my volume. I don't know if my volume is better now or.
Oh, I hear you
If you want
fine
this
on
to-
my end. Maybe they couldn't hear you. I see that now. Yeah, but I can hear you
Walgreens, I think
fine.
has so many issues.
Really? Didn't
Yeah.
they go?
Oh, you're on Seeking Alpha.
Yeah, didn't they go Canadian a couple of years ago?
No, I mean, no, I don't think they went Canadian. But check this out. I can show you kind of the story. What happened? Go to the charting in Seeking Alpha. This is. I'm gonna watch you at a lag. Unless, can you share your screen on Discord too? Then I can see you like.
Oh yeah, I should do
Real
that.
time.
Yeah. So that.
I'm seeing,
Right.
Like,
Yeah. Here we go. Let's do this.
all right. So check this out. So if you go to Walgreens, go to charting,
Mm-hmm.
and then go to metrics. Oh yeah. First, remove the S&P. Sorry.
Oh
I
yeah.
forgot to mention.
That's always like the
So that's-
default on there.
Yeah.
Yep.
Select metrics, and then go to, I think it's in profitability. Go to
Profitability.
And then you can do, we're looking for operating. So
Operating
you can do EBITDA margins, or no, operating EBITDA margin.
EBITDA margin.
And gross margins. Put them both there. So gross margins there.
This
right
one?
above, right there. Yep.
Okay.
And then update chart. And max it out as much as you can. I think like go 10 years.
Oh. Okay.
Yeah. So
Ah.
this is what I'm trying to show you in your audience here. This
Mhm.
is like the story, the illustration that's played out. So people have been pointing out, right? Oh, let's do one more metric to put a point that I get this all the time, and I get into discussions with newer investors on Discord all the time on this because they will say like revenue's dropping or revenue's increasing, therefore it's a buy.
Mm-hmm.
We want to go to, I think it's earnings earnings and Seeking Alpha. I think
Mhm.
no, never mind. Revenue is somewhere in here. Oh, can you search metric revenue?
Oh yeah.
Revenue or sales. Total revenue
Yep.
and profitability. All right, update chart. All right, so the
Oh.
story that you see here
Yeah.
is revenue is growing, and so some investors, and I swear to you, I get in discussions all the time. Except, in fact, the centaur in the chat, he's witnessed me get into discussions with people on this because they'll say like, but the revenue's doing this, the revenue's doing that. I'm like, dude, your analysis is like at the very tip of the iceberg. There's so much. But anyways, so you see revenues going up, and a lot of people see that as like the business is doing well or it's doing fine. They might even be looking at, just straight net income, but that could be manipulated through share buybacks, etc. So not net income, sorry, EPS.
Mhm.
But take a look at the operating margins and the gross margins. So this tells you a more accurate story of what's happening through the business across time.
Yeah. What I'm seeing, the
And-
revenue and the profits are moving opposite.
Opposite.
Yeah.
Mm-hmm.
Yeah. Mm-hmm. So something's
Yeah,
eating
that's-
into their margins then.
Yeah, you have a couple theories there. I mean, you could say that it's competition. You could say that supply chains have become more difficult. But yeah, and if you map out CVS, CVS will tell you somewhat of a similar story, but then it gets muddled because they bought the insurance business.
Yeah, I sold out of CVS like a year ago.
I forget the price action. You sell that for a profit? I forget what.
It
CVS
was. Yeah, it was.
did. Good, nice.
hmm Yeah, it was one of those, like, I had a habit of, like, buying a lot of stocks, like maybe 1,000 or 2,000, and then I would wait for it to go up, then I would sell it for a gain, but it wasn't really meaningful because it was a small amount.
Are you selling some of your stocks a little too early, or no? Those were small amounts, right?
Yeah, well, I found that too. Like, if I back test every stock I've sold, I would have been better off actually staying in the stocks I've sold out of.
Yeah, it's like portfolio management is just as hard, if not harder, than individual stock selection, and people underestimate that
Mhm.
the most. It's like after a while, people start to say respect it more. Something I noticed too but everyone's portfolio management strategy is going to be different. But generally speaking, when you're right, you want to kind of lean into that, and then when you're wrong, you want to kind of figure out how quickly you can figure that out and then
Mhm.
get out.
For sure.
So,
Oh, what were your thoughts on 4, by the way, 4-star?
so I need to see first like what this company is. So looks like something's changed, and since 2022, it's like up in a straight line, really strong performance. But what does
Yeah.
this business do here?
It has to do with home building.
Oh, okay. So yeah, anyone and everyone in this space has done fairly well. And so, okay, so it's a single family home.
hmm
Wait, no. The company acquires and develops infrastructure. Infrastructure, or are they just building the neighborhoods?
No, they're not like a home builder. But I think they'll benefit from, like, if interest rates start to fall, they'll definitely benefit from that.
Wait, but if they're benefiting from new home sales, like new home sales are really strong right now. It's existing home sales that's weak.
Yeah.
So, my
Oh, they were a
infrastructure.
subsidiary of D.R. Horton in October 2017.
Very interesting. So they spun that off.
Yeah.
And they build parks, playgrounds. Okay, so I guess they're contracted to build out, like the community centers, the parks, the playgrounds, all that jazz. So,
hmm
okay, wow, didn't know a company like this was independent. Because I usually think of them as part of the actual home builder.
Right.
Okay,
I guess they would have been, but they were spun off.
yeah, I'm looking at. No, it's fairly well capitalized. It's nothing crazy.
I liked what I saw when I looked at the statements.
On a forward basis, this still looks pretty cheap.
hmm
Capital return, let me see what they're doing. No, I mean, they're raising capital. I don't count the IPO, but they're raising capital, diluting by what? Oh, nothing. 0.8, 0.68. You could ignore that.
Oh, and the diluted
Yeah.
shares.
Yeah, you
Yeah.
can absolutely ignore that. That's just stock-based comp, but it's like nothing you
Mhm.
would feel. No, I think I like it, except my question is like, I don't know what the effect on new home sales is going to be. Well, I have investments that should do well with new home sales, but there's always like that doubt in the back of my mind.
hmm
So I don't know if it's clear cut and dry if they'll just do well, but
Yeah. Oh, I see Kale
Yeah.
on the voice chat as well. Can you hear us, Kale?
Yeah, I'm just lurking.
Oh, cool.
he's lurking.
Yeah.
I'm
well-
waiting to have something smart to say.
Oh, cool. And then we just had
Wow,
someone
okay,
else.
voice is getting populated.
Oh, this guy is a fun one. Norbalito.
I remember you.
He was just teasing me the other day how no one participated in the live stream.
What's going on, man?
Hey, we got 4
You do
people.
live stream that?
Yeah, see, and we got actual people on the voice chat now.
Oh, so you managed to do something, huh?
Yeah, I did before.
I'm actually a figment of your imagination. I'm not real.
Ah, darn.
I'll bring the tequila.
Yeah, maybe not on the live show, but yeah, sometime for sure. But anyway, yeah, continue, Coney.
What's up, Tony?
Yeah. Hey, how you doing, Overlito?
I'm good, man. Nice to see you here. Padma says hi.
Who?
He said Padma.
Padma.
Oh, that lady.
Yeah.
Yeah. Yeah. Well. Anyways, so yeah, 4-star group. I didn't know a company like this existed. I mean, are there any themes that you're trying to capture?
Not particularly. I'm just looking for like good growth opportunities.
Yeah. So like.
Not this one for sure.
There's a.
Where's my? Oh, here it
I
is.
can kind of name some starter themes and then kind of explore ideas from there, because you have infrastructure, real estate. So those are like bigger overarching themes that you can subdivide into interest rate plays.
Mm-hmm.
Because we have the announcement or the dot plot that we're going to get an estimated of 3 rate cuts this year. So there's some investments out there that could do very well if interest rates do drop.
Right.
I'll cover some of the ones that maybe just a shout out that I've covered publicly at this point.
Yeah.
So some of the ones like I don't own any investment in these, so I'll disclose when I am long and when I'm not long.
Right.
But if I am not long, that doesn't mean I don't think it's interesting. It's just I have other things that I'm buying. So like ticker symbol SAFE.
Safe hold.
It's going to be a bit of safe hold. So let me actually see your screen so I'm up to the date. Yeah, so safe hold. This one's interesting business. What they basically do is they do a lot of land leases, and so you get a little complex in the valuation here. But on a high level, you have a business that should be trading or fluctuate in value, kind of like a long bond on steroids. So for just a quick 101 lesson for anyone listening, when you talk about interest rates coming down, usually the standard trade that someone thinks about is, oh, I'm going to go long the 30-year because the 30-year is going to be more sensitive to interest rates coming down than the 1 year is an extreme example. Well, Safehold has leases that go up almost to a century. So the value there change on those leases is going to be far more dramatic. And so this actually trades really heavily in line. And go ahead and for me and click the 5-year to show the audience that the extreme price change or volatility. And this falls basically in line with interest rates.
I was gonna say, when I see a chart like this, I blame this on the interest rates being increased.
Yeah, so this one you definitely do, because the valuation is going to be heavily tied to where rates are at. So this is one that I don't invest in myself, because I have decent exposure to that idea in general, but I do recognize that this is like a leveraged play on interest rates coming down, and I could see it doing really well if we do see that. But because there's a product, I'm so scared to say this product publicly because it's not my fault if someone buys it and executes it poorly, but TMF is the ultra leveraged, so 3 times leveraged TLT ETF.
Yeah, someone just mentioned that in the comments.
Don't do this.
Yeah.
What about TMF? No. Oh, okay, I see it. Orion. No, don't do this, please. Okay. So TMF, if you read the prospectus, there's so many scenarios in which TMF does poorly. Your timing has to be impeccable. So even in a flat year for rates, or if rates don't go up and we're talking about the long end of the curve, not the short end of the curve. Okay. So the long end of curve is not as tamed as the short end of the curve, because there's just less liquidity out there. So when you're playing the long end of the curve, you are going to be more prone to, let's just say market forces. And so I would say if you're going to do one, do TLT, because you don't have to worry about the perfect timing of it. But TMF is definitely a trading instrument.
Mm-hmm.
It is not something that you're like, oh, I'm going to hold this and just wait for rates. No, oh my gosh, no, you're going to get clapped. But safe hold is kind of like a TMF in a way,
Mm-hmm.
but so not this one, but the
No,
other
I
one
just
above
I
it.
saw that Motley Fool had a 100 index here. I've never looked at that before,
Oh,
but yeah,
I've never seen this one.
yeah, it just caught my attention. Interesting. I'll look at it later, but yeah, TMF. Stay out of TMF.
I mean, at your own discretion. I mean, I'm not gonna.
Yeah.
You want to go on a wild ride? Go for it.
So I play the UPRO. I like these direction ETFs. I'm way up in the UPRO, actually. I know some say that the 3X has some, like, decay over time. But this one I'm doing great, and
Yeah, no, I disagree with that. I think you're fine in a low volatility environment. These do well. It's about the direction and the
Mhm.
volatility.
yeah.
So, yeah, no, I'd say it depends, because if let's say we're in the you know how some people are saying right now we're gonna have the era of let's say the market's gonna go nowhere,
hmm
flat market. Yeah, you don't want to do this.
Yeah.
That's where you get the decay.
Dissector wants to know if you think he's a clown for liking the Seeking Alpha quant ratings.
I would not rely on that.
We should cue the clip of him. I don't have it.
I won't call you.
offhand.
No, I won't. Yeah, and Dissector, I won't call you a clown. I reserve that only for a certain select few individuals that I've ever met.
We'll save
One
that
of them
for Kilmer.
Yeah, he's.
That's what I thought you were
one.
gonna say.
Norbelito mentioned the other name that I would probably call a clown.
Oh, was that who he said? Yeah.
No,
I
he didn't say Kilmer. He said someone else. Who,
Oh.
In discussions, I could only determine that they're.
Oh, I got you. Yeah, yeah.
So just tell Detector the Kamir says hello too.
The what?
Tell your friend the Kamir says hello too.
Tell my friend.
Oh, we'll relay
No,
that. No,
yeah.
that's okay, Norbelito. We'll relay that message. Anyway. All right. So
I don't know
yeah,
what funny stuff, but anyways.
yeah.
Coney, if you look at long term, even the TQQQ, it's up like 10K%. Yeah, no, I
Oh, he
don't
left.
see a problem. I don't see a problem with it if you're operating in a low vol, bullish environment. It's
Mhm.
fine. So, I'm not saying against it. I'm not against it, but if you have like a flat period, yeah, that's when that strategy gets clapped.
hmm
Like I'm not calling that a clown strategy. The only strategies, I reserve that specifically for the ones that I've criticized. You may have seen me criticize on YouTube in the past.
Yeah.
So
Did you see
leverage if used properly, it's good.
Yeah. Did you see the comment I got today in Discord? Or not in Discord, but it was a comment I posted in Discord that I got on one of my videos. This person said Yieldmax attracts a smarter, more successful demographic.
Oh my god, no, it's
Yeah.
it's completely the opposite.
Yeah.
Yeah.
Yeah, that was
That is
funny.
what I
If it's
reserve.
upside down day, that would be accurate.
Right.
Yeah.
Exactly.
Yeah. I've been spoken to, I guess, by members of, call it the wider community, and they've convinced me to just take the finance black pill on the and I've taken it. I
Really?
have taken it. So I no longer give a, well, I'll refrain from cursing, but I'll no longer give an S.
Yeah.
I'll just watch them choose poverty, and that's fine.
Yeah.
What kind of popcorn do you eat while you watch people burn their entire wealth away?
I don't know. What kind of popcorn should we get?
I've heard, I don't know, the
Uh,
microwave stuff I've heard mixed
Microwave
reviews.
stuff?
Yeah.
You know what? Should I
Got
support
that
the
movie theater
AMC
popcorn.
shareholders? I can get the AMC popcorn.
There
Yeah,
you
do
go.
that.
There you go.
Run
Yeah.
with that.
Yeah. Doubt sell puts on IBM. Oh my.
Yep.
Yeah, big blue. Are you gonna do any interesting options trades?
I actually made money on Tesla today.
Oh.
Yeah, because they
What'd you end up doing?
just a call option. Well, I closed it. I had bought it because I didn't think they would fall lower than they were. So I figured within the next few months there might be some kind of a little bit of a bounce, and it was more of a gamble than anything. But they were actually, yeah, this morning they closed $5 up, so it made the play that I made. It made it like positive, so I closed it.
Oh, okay, so you just did a quick trade.
Yeah. Yeah, in and out. I don't want
Yeah.
to stay in because it's so unpredictable what Tesla's going to do.
Yeah, man, the fascination on Tesla is really interesting. So I love the car. I've had two at this point, and right now, I mean, my dailies. Well, I don't want to get into that on stream, but I went back to a gas car.
Oh,
And,
really?
for
From
fun.
Teslas?
Yeah, from
Yeah.
Tesla. But
Interesting.
I view them just differently. But because the gas car is more of like I wanted to get it while I can enjoy it, and I don't think it's something I can have when I have a family. So
Right.
Why?
what do you mean why, Kale? You know why? It can't fit anywhere.
But okay, then it's just like a weekend thing. You don't have a weekend car?
Yeah, but like it won't be yeah. You're right. It could always still be just the weekend car, but
Everyone's got to have.
it's
a
just
weekend
another
car.
car.
Well,
So,
I
but
think you're
I
paying
do have
insurance
I do have the other electric car that the company paid for.
Oh, cool.
So,
Wait,
Is
your
that-
company or the company you work for?
company I work for.
Oh,
Yeah, 'cause that
Nice.
was the I'll send you a picture of it.
sweet.
Yeah. But yeah, what were we just discussing? Like Tesla.
Yeah, Tesla.
Do you have a long position in Tesla?
I have some stock in Tesla, but it's down.
What position? What price did you acquire it for?
I have to log in and look. I don't want to do that on screen, but I'd say I'm down. It was like
Ballpark.
2 something.
But just so you know, a certain someone who shall remain unnamed. Thank goodness that anyone who has the screenshots is not like nefarious wants their money. But someone accidentally logged in and showed all their account personal information today.
Oh. Really?
Yeah.
Wait, and you're where?
No, not me.
No, not
Oh.
Coach.
Yeah.
But use your imagination.
No, I can
Oh, I
imagine.
know who you're
yeah.
talking about. I think
Yeah.
I know what happened.
Yeah. So that's not gonna. It's just people need to be more careful.
Yeah, for sure.
It was shared in like the memes. But so Tesla, yeah, rough ballpark where you own it at?
Yeah, I got some in the 200s.
Okay, so like high or low 200s or mid?
Yeah, I think it was around mid, actually.
Yeah, so like my thing with Tesla is the only thing I find really interesting about the business is the energy segment, especially kind of considering all the constraints the United States is going through with, well, at least projected with energy.
Mm-hmm.
Because the car business is so tough, but I mean, if the car business propels them into, solidifying a really strong energy business, I can see that, but if it's just cars, yeah, that'd be problematic for me personally.
So all the
How fully integrated is
questions...
Tesla.
Huh?
Well, how fully integrated is Tesla? Like Ford, GM, Toyota, they actually do a lot of outsourcing to other companies to build a lot of the components that go into their car. And Tesla's always bragging about, their car has very few pieces and that they don't really need to borrow a lot of IP from other people. I wonder if that's fully true. Because if that's not, I think the smarter way to play Tesla would probably be through a supplier. Like if you think Tesla's going to sell more cars, if there's someone that's like super exposed to them, kind of the same way. What's the chip company? Is it Cirrus Logic that's like super exposed to Apple sales?
Yes, that's Cirrus Logic.
Oh,
I
okay.
think that's a less degenerate way to, like, if you're gonna own, if you're gonna bank on Tesla selling more cars, you just add an extra layer of risk, but you're exposed more to the car sales. And lately, I've been looking at suppliers like RV suppliers in particular, but I've looked at a few auto manufacturer suppliers, and it seems like the margins are a lot cleaner, a lot better on the parts manufacturing side.
Dissector mentioned
A lot more tailwinds.
Dissector just mentioned Modine Manufacturing Company
What about it?
that Tesla buys from them.
Ooh,
Yeah.
publicly traded. See, that would
They-
probably be a better way to bank on Tesla selling more cars.
Yeah, they're up. Let's
Yeah.
see. In a year, they're up like almost 400%.
Oh
See,
yeah,
there you go.
Yeah,
yeah, way better.
yeah,
way
The-
better
the-
Tesla.
for sure.
But
Yeah.
the risk is, of course, what if Tesla finds a better manufacturer, for whatever reason decides to go in house or essentially stop using them? Any reason that would be the case.
Right.
That's always the risk with that.
Hmm.
Orion's playing a game, so I guess we all have to choose one. It's just me, but he said if you had to choose a high yield fund, even though you probably don't like any, what would you choose? Oh man,
Right now,
I'll
Feppy.
let-
Feppy.
Peppy.
Yeah.
I definitely would not pick any of the synthetics.
Yeah.
High yield. What counts as high yield? Like
Dude,
20%
I love
up?
that. Yeah, no, Kale. There's a warped perception now with high yield.
See, like high yield for me is if I can find something growing the dividend at like greater than 10% a year, and it's got like a 4% yield, like that's high yield to me. Like if I believe it's going to grow at some crazy rate, like Facebook, at some point will be a high yield dividend in my portfolio.
Yeah. So Charles Ollinger pointed out here, he's saying Feppy actually does own the shares directly.
Yes.
Yeah.
Yes.
Yeah, I like that one. That would probably be my pick.
I'm going to piggyback off of your selection. I don't really look at any of the high yield stuff.
But you're talking
It
more
scares me.
like
Well-
like Altria. If you're talking like 4 or 8%.
Yeah.
Yeah.
But the problem when I look at like Altria and BTI is like I feel like the business model isn't sustainable.
Mhm.
And actually, who was it that I watched the live stream? Was he pitched the High Tide, the weed
Blake,
company, the really
was
small
it
market
Blake?
cap.
Blake Downer.
I believe so. Yeah,
Yeah.
Blake Downer.
Oh, guess what we just
When
found?
I see like a company like that,
Yeah.
I think weed is gonna kill cigarette companies, like traditional smoking companies somehow.
So before you
Not-
guys
not-
joined, we noticed that on the Seeking Alpha top stock picks, High Tie's number 25 on the list.
Oh, did I
Ooh.
tell you I bought in my holding company. I bought about 7,000.
Of High Tide?
Yeah.
Oh, cool.
Bro, I listened to that on a plane ride back from Indiana last week.
Yeah.
He explained the business pretty well. Like I gave it a look, and I actually started a position this morning,
Nice.
really small, like less than 1%. But if it does what I think it can do, that like there's like I'm not the risk to reward type of guy where it's like if it does really well, I'm going to get this return. If not, I lose less than 1% of my portfolio. But that's going to be one of those companies I think where just because of the market cap, if he's right about like the legalization, if that happens in the U.S. or just anywhere, that company's going to go.
For sure, yeah.
Let's see, so I'm just looking at Feppy though. I know I have to pick one because that's the game. Playing
Mhm.
the game here, and I have to
If-
pick one.
If it's a down market, like a slightly down market, is JEPI considered high yield? I wouldn't want to own that in a good market, but if I wanted exposure to the index,
Yeah, I
maybe
would say.
JEPI
Yeah, I
on
would
the
say.
downside.
Yeah, JEPI 8%. Yeah.
So yeah, maybe I'm going to do that just to be different. But I would only want to own it if I think like the next year or so is going to be a down market,
Hmm.
just because it'll not depreciate nearly as much, and you get to collect that yield. So
You know-
there's a better chance of protecting your capital, I'd say.
and I just want to. I'm gonna do it in the spirit of the question because I understand that the person is asking. It's not said explicitly, but it's implying asking us to pick a covered call ETF strategy, not just like high yield. So, yeah, like FEPI would fit that. But, I'm even looking at them and I'm like, okay, why these stocks and why equal weight? Just cause?
I think I would rather own Tesla, the Tesla one, before I own the Coney one.
You mean the Yieldmax
Like I would,
one?
like I don't want that. Yeah, like of the Yieldmax stuff. Like Tesla is at least an actual company. Coinbase isn't. Well, it's a real company, but the asset is rather.
I actually have some Coney. I'm probably gonna sell it very soon. I'm up in it.
Oh man.
Yeah.
If you made money in those instruments, I mean,
It's
Good
a
job.
plus. Yeah.
take it. Yeah.
Yeah.
Yeah, take it.
I view a lot of that stuff as a trade,
hmm
but
like,
and I don't do that.
Why? And I know they do monthly and not weekly, so. But even then, I just don't like having any of that out of my control because I don't trust them to not fuck up. Oh, sorry, to mess up.
Yeah.
Tweet me out.
Yeah, it's okay.
Oh my God, I'm looking at your stream. Bluebird Corporation, isn't that like the bus maker?
I was wondering,
Is
actually.
it on the list?
Yeah.
I think that's literally the school bus maker.
Yeah, I was thinking I've seen that one before. Yep.
I kind of want to be more entertaining with the game and not pick the same one as you guys, so I'm going to refuse FEPI. I'm going to hunt. Hold on, give me a second.
Well, I was going to ask you, what do you
counts? It's not covered calls, but it's.
what do you think about
equity linked notes?
what do you think about SVOL?
Yes. Oh, what's SVOL? That sounds familiar.
Yeah, it was like 18%. Simplified volatility.
No. I'm not touching any strategy based on volatility.
Yeah.
I'll take FEPI. I'll take FEPI
Yeah.
for that. But
Why do they call
I
it
don't-
simplified volatility?
I'm just making it more complicated myself that I don't want to choose FEPI.
Oh, by the way, so I have
you
those
two both
people.
chose FEPI.
The what?
No, sorry. You go.
Oh, I have those people in the works to come on. The fund manager for what's it called? Simplify ETFs.
Oh, that's good. Congratulations.
Yeah.
Oh, it's simplified just like a brand. It's not like there's some, simplifying it.
Yeah.
Am I
So
thinking about that wrong?
SVOL is one fund they run. There's another one. It's actually ticker symbol HIGH, which I thought would have been based on something else. A certain green substance, but I think it's actually like a treasury, some kind of a treasury yield. Yeah, Simplify Enhanced Income. Yeah, ticker symbol HIGH.
Yeah. I mean, not my cup of tea, but
Right.
it's just individual security selection is already hard enough, and then why take on
All the risk.
You're mostly
with-
individual stocks and all the risk and none of the reward, or half the reward. I mean, we can just give me the money, and I'll just buy the stock, and I'll give you a
Yeah.
bit, and then from that half, I'll pay you an 80% dividend yield, and you'll feel happy. But I'll keep half of the total return.
Yeah, I was
think
thinking
if
about
you do
that. Go ahead. Yeah.
I think if you're gonna do like the ETF strategy, like the FEPIs of the world and whatnot, like maybe not FEPI, but like even like the Yieldmax stuff, since that's a little easier to understand because
Mhm.
everyone talks about it. I think you're better off doing everything yourself because then you save yourself the fees. But then after that, if you understand what you own with like a Yieldmax fund, and you're probably smart enough that it just makes more sense to do the actual trading the way they do on your own,
Mhm.
and then you can you're out. You can be in and out. Like by the point you understand Yieldmax, you probably understand options well enough that you should just make the trades on your own and save it, and then you can cut the strategy as soon as it's really bad.
That's exactly what I was going to say. Like, if you can do cash secured puts on your own, do the wheel strategy on your own, yeah, then what's the point of buying into these funds?
Yeah, and then the cool part is if you still have the shares in there, you can always, under your covered call or whatever on your own and still maintain the upside.
Mm-hmm.
Like you have optionality. Like, oh shit, this is gonna. Sorry, I didn't mean to swear. You have the optionality. Like, if you think it's gonna run, to end your position, your call position, and then just have the exposure, without leverage.
Mm-hmm. All right, so then favorite stock, like, for the next year, if you could only buy one stock for the next year.
Ooh, that's a fun game.
I like these games. 'Cause
Yeah.
it kind of plays in my approach. I probably sell more often than I should too, but I'm always looking for something I can hold for forever. And I'm deciding between Patrick Industries, the ticker is a PATK. I'm super knowledgeable on the industry,
Mm-hmm.
so I understand it a lot better. I have a literal edge, but it's a very cyclical industry, and I'm kind of leaning towards Snap-on. The return is going to be
Snap-on
the
tools.
sexiest. Yes.
Yeah.
Also very familiar with the
SNA.
brand
That's the name.
SNA. Well, Snap-on and Patrick Industries. Those are like I'm kind of
SNA.
choosing
Yeah.
between the two. Mm-hmm.
Mm-hmm.
Patrick, you kind of have to. You can get a really good return, but I think you need to know when to buy. Snap-on, I'm not really sure like what market they do that in. Like if you wanted something safe, not that you should ever look at any security as safe.
Right.
you looked up Snap, what is it, the app? Oh my
Yeah,
God.
that's the first
My
one I
brain's
pulled
not
up. Yeah, Snapchat.
Everyone does that.
Yep.
Yeah, Snapchat. So
Yep.
Snap-on, I like. Okay, so this stock will move a little bit on earnings. You'll see like it has these like vicious for Snap-on. They're vicious drops,
Mm-hmm.
and then it recovers relatively quick. What it is they'll have a quarter or two where they're negative they have like negative sales or something
Mm-hmm.
in their van business, which is usually like mechanics, overthinking the economy and just not buying, essentially, or for whatever reason. Like I think this holiday season they didn't buy because inflation's been rather tough the last year, and but they wanted to spend money on Christmas presents, not power tools and wrenches and whatnot.
Yeah, and
It'll come back.
they're not cheap, right? I mean, they're good tools, but they're like not
Oh no,
cheap.
they're the best brand, but
Yeah.
you pay a pretty penny for it.
Right.
And that's the thing that the selling point is they're the most reliable tools you're ever going to own.
Right.
Which I use enough tools, and I don't get caught up in the marketing, but I see people make the justification every day why they need to own the
Mhm.
$400 wrench and not the $150 set.
Interesting.
And it's got like Apple level brand value amongst mechanics. I would say like they'll tell you why Snap-on's the way to go.
Yeah, and like you were saying, it could be kind of a recession-proof stock too.
Yeah, that's actually the funny part. When you talk to mechanics and people are kind of familiar with the industry, anytime the economy tightens up historically, instead of buying a new car, you fix the old car. But even then, so you have all these new cars on the road, they need new tools. You have to spend more money to be able to fix the new cars.
Right.
And they're starting to get into like the sensor business with like auto body and repair.
Mm-hmm.
Which there's like my truck has a windshield that if I replace it, I have to take it to the dealership and get my the windshield has to be recalibrated to the car.
Wow.
That's expensive.
Mm-hmm.
And that's the stuff they're going after. They're going after more specifically the underbody, like the suspension and the turning, which is a big deal with electric cars. The cars weigh so much more. The suspension is going to be a lot more difficult to manage and maintain underneath the car. Even though you don't have that engine to maintain anymore, you have to stay on top of suspension pieces blowing out or going bad. And actually, now I'm thinking about it. If you think electric cars are going to take off, someone needs to look into the tire companies because you
Yeah.
can't just put the same tire on on an electric car.
Right. Yeah, like Tesla, they don't take like the same tires that a normal gas powered vehicle would take.
Yep, you have to have a heavier duty tire, and then
Hmm.
it's going to be more expensive, probably better margins potentially.
What do you guys see the future of the electric car market being? Do you think it's starting to plateau, or that it's going to continue to snowball?
It's plateauing right now for
Yeah.
sure.
Yeah.
Hybrid cars, you look at Toyota, really good on hybrids.
Hmm.
There's another company I'm in. I don't talk about it much, but I have like the tiniest position in my portfolio. It's Finia Inc. The major risk with this company will be, I think it's like ticker is PHIN.
Oh, that way.
And
PH.
all they do, they sell into China quite a bit, but then also they're under investigation by the German authority for emissions scandals, like essentially like a Dieselgate thing, kind of like what Cummins just got hit with.
Mhm.
I actually started a position after the Cummins thing kind of came out. Like I was like, they're not going to bankrupt the company. You know, they just want to get their money and get their fine.
Right.
But they are getting investigated by the German authorities. Something might come of that. And the thing that was interesting is this one's literally, I think right now, priced beneath book.
Oh,
So,
really? Finia?
In the event that something, yeah, I think if you look at the book value, it's floating around like a 0.95. When I looked at it like in November, I couldn't buy it then. That would have been before I think the Cummins scandal had been resolved or
Mhm.
fined yet. And I think it was close to like almost half the book value or something like that. Or no, it would have been like not half, but it would have been a better buying opportunity. And I couldn't do it. I didn't know enough yet.
Yeah.
That would have been when you buy it. That would have been like the true margin of safety, because let's say they get hit with some sort of fine and they have to sell assets and they're just liquidating.
Hmm.
That would have been where you probably get out with.
You're right. Price to
minimal
book.
loss.
Price to book is below 1.
Yes.
Yeah.
But there's a reason for it. I would say their customer base isn't that great, and whatever comes of that German authority issue would be eye-opening. But also the thing that's also more appealing, they are making hybrid systems. It sounds like they're trying to make a hybrid system. They have a little bit of hydrogen. I'm not too interested in it. They might be making hybrid drivetrains for semis potentially coming up, or at least heavier duty trucks, not necessarily light duty passenger cars. There's a theory for that.
Hmm.
And I think trucking is going to take off maybe back half of the year. There's going to be major investment going forward. And then, of course, there's a play for that I have. It's Allison transmission. It's not my original idea, though.
Oh, same ones that Coney was just talking about before.
Yeah. Oh, dude, I'm like super familiar with the product for the most part. I don't drive like a big rig semi or anything, but let's just say Cummins and an Allison transmission is probably the best truck you can build.
After I was evaluating Allison, I mean, it looks like it's ALSN
Oh, yeah.
for the ticker.
Yeah.
It's kind of getting a little ahead of itself. Like, the performance has been pretty freaking good.
Yeah.
And really happy with it. But for the most part, the thesis, a lot of it relies on the buybacks, and the buybacks are going to get less and less effective as the multiple starts to expand. But like Kale said here, not getting into too much detail, but Q4 of this year, it's reasonable to believe that trucking is going to make a comeback, and what their category is called is on-highway. So the on-highway category is a big deal for them, and if that recovers and then you see increased profitability in 2025, sort of like mid-2025, then you actually still look pretty cheap on a forward basis, maybe even cheaper than what's implying there. So
This would actually also take off, funnily enough, if mining for the raw material to make batteries takes off, because they have an off-highway segment too. So in a strange way, even though they don't necessarily participate there yet, if there was just significantly more investment in any sort of mining operation that involves moving major material, this is another company that would do really well.
Is that for
It's
the
a smaller segment.
the lithium mining?
Potentially.
Yeah.
And the idea being is like, you're building a transmission that goes into a truck that moves heavy material. and it would, if you suddenly need more mining equipment, one of those pieces would be just, vehicles in general. Like, it won't just be the trucks, like the off-highway trucks.
Mm-hmm.
It might be, I can't tell you the names of any particular equipment, but it would be some of the stuff that goes in the mountain and helps excavate out the rock. Like, whatever that is, some of that would be in there.
Oh, okay.
Yeah, there's a couple ways to still win here.
The major risk, though, with Allison, if you look at holding it for like a 10+ time horizon, will be, can they convert the existing product lines to something that's electric friendly or hybrid friendly? That's my only concern.
Oh, okay. Yeah, it looks like they've got it strong buy for the quants, and then Seeking Alpha has it a buy, and then a buy for Wall Street too.
Yeah, I don't know if that was always the case.
Yeah.
But yeah, now they're definitely, yeah.
Mhm.
I basically ignore that. I never look at it.
Really?
I've never considered. I got into investing middle, like super into it, middle clown market, like before Jeremy exposed himself as like a complete buffoon. like when Tesla was still I almost swore again, but when Tesla wasn't as questioned, maybe before the first few splits, right?
Yeah.
And I kind of was like just sifting through opinions on the internet.
Mhm.
It took me a while to find like a few actual sources that I care to listen to. So
Oh,
I've. Oh yeah, no, seriously. Dude, it took a while, dude. Like, I'm not that smart.
Would you say that
I gotta
Jeremy
find.
Jeremy was like the OG clown on the finance YouTube?
Yeah, I
Yeah.
would. I would
Yeah.
definitely say that. It's weird because the comment from anyone that's like watched any amount of YouTube is like, his content used to not be that bad.
Mm-hmm.
Like, I don't know what happened, man.
Yeah.
it's not that his content used to not be that bad. You learned more, and he didn't.
Right.
So,
Yeah, because he started like with the chalkboard and stuff, or like the whiteboard.
yeah, at least then, he could draw a GoPro.
Yeah.
Sorry, I just had to.
I bet his investment in GoPro was because that's the camera he used.
Probably. Yeah.
Is
Invest.
that what you just said? Ah,
Yeah.
Yeah.
God,
Yeah.
that's like
And-
the worst DD, but I rely on that. Like, that's like the starting point for a lot of my ideas. Like, I'm not smart enough to dig, like, to reach out into the ether and pull something out.
Mm-hmm.
Yeah.
Oh, we got a comment that says bullish on Yieldmax.
No, I get. No, don't worry. No, okay. Yes, you should go harder into Yieldmax.
That's the black pill, Fabio speaking.
What black pill me is. Oh yeah, harder. Go more.
Buy all.
No.
Buy
way
on
to-
triple X leverage. Totally.
That's yours.
None of this is recommendations.
100%.
Oh, someone's in there talking about Borg Warner in your chat.
Yeah.
You got to be careful. So here's the interesting thing. So if you buy Finia, you're buying what I believe might be the actual decent management coming from Borg Warner. It's a spinoff. And there's actually another one. I can't remember the ticker. It's Adaptive or something. But Finia is a spinoff from Borg Warner. And from my estimation, again, super small company, I can't confirm all the way, and it's a small amount, so I haven't done maybe the necessary due diligence to tell people, it's a great investment or whatever. I wouldn't.
Mm-hmm.
You might find something that contradicts me. I think Borg Warner has had rather terrible performance, and the Finia, I think the management pitched that they spin off certain assets of the business to the upper management of Borg Warner, and they agreed to it. And then, not realizing what they're giving up, because Borg Warner's going through like the electrification thing, where oh yeah, you just got to electrify, and which is weird because, Borg Warner, anyone that knows Borg Warner knows it, like they're known for their turbos.
Mm-hmm.
This is a part that you put on a gasoline or a diesel engine. They don't really have the expertise they have to acquire to do the electrification side of things.
Mm-hmm.
I don't see, there's nothing that Borg Warner does that I'm aware of that screams that they'd be a good investment. And I don't really like the management based on their buying and selling activity of assets in the business. Because again, like, why would they give up Finia, which seems to have okay numbers if you don't look at like the weird, if you ignore, again with Finia, it's kind of a spec play. If you ignore like some of the presentation materials that they released before they had a full year or a 10K released, they had some funky math that they showed, and that I got called out on when I originally pitched it. I just don't remember what the term was.
Oh, so
Interesting.
Yeah. McBuda did. He was like, "What's this number?" I'm like, "I don't fucking know." Sorry, I swear again. So it's like, that's why I'm asking. Like, I don't know. Like, tell me why I'm wrong.
Right.
Oh. Yeah.
So how do you guys usually go
It's
about
like-
picking stocks?
Well, complicated, but starts with your imagination from SpongeBob. But no, joking aside.
Well, you guys know how I do it. I use the 8-ball.
Use the 8-ball.
Yeah.
That's a good start. Too.
I call it. It's actually the Advanced Financial Forecasting Equipment, also known as the 8-ball.
I just like full like degen
Yeah.
Peter Lynch style. Like, I have to be able to go see the factory in person.
Yeah. Good businesses. Right.
I say that actually. I drove past. There's a company called LCI Industries. Again, I'm super familiar with it because I sell their products.
Oh.
But I drove in Indiana. I drove past their plant, and I was like taking pictures of it and sending it to some of my Discord buddies that we do this with.
Mhm.
I'm like, guys, look! I'm at the factory. I can buy the stock now.
Oh, cool.
But yeah, I think it just starts. It starts with using your kind of, I want to say, creative thinking and pitching out like a theme, because you want to try to capture a theme, and then you go about investigating how do you capture that theme. So, like, I'll give an example. I think I'll just use to be, the theme we were just talking about. Electric vehicles are the future. How do I play that? What's the best way to play that? And then you can go top down from there. Do you go directly through the brand? Do you go with a parts company that sells parts to Tesla? There's gonna be so many ways. Take airplanes. You want to invest in commercial airliners. Okay, you can go Boeing, Airbus. Okay, are those the only options? No, you can go Boeing, Airbus, plus all the parts manufacturers. There's a bunch of them. There's like 20, 30 publicly traded ones that you could shift through all of them and then sort of pencil out which one's in a good position. So I'm not saying that's something I'm investing in, but that's just as an example.
Right.
So
My investing in the suppliers probably wouldn't work so well with a Boeing position right now.
Yeah.
Assuming, depending on the product.
What's a good
or
site? So, like, I've used Bloomberg before. It's, like, way expensive for individuals, but I used it in my master's program, actually. And I remember how it would show, like, you could look up a company, you could see, like, all the suppliers and stuff. But what's a good site to see, like, all the suppliers of a company?
they usually tell you for the most part.
Yeah.
If you go through enough of the company's own documentation, you'll find a lot of that.
Yeah.
It's just, you're talking about really good data aggregators. Yeah, Bloomberg's amazing.
Oh yeah, because I remember, like, you could type in for, I forget what company it was. It might have been Starbucks, but like you could see it was like a chart, and it had like all the suppliers, and you could click on each one, and you could like see all kinds of information about each one.
Yeah.
So if a company is massively exposed to a particular supplier,
Mm-hmm.
if you want to cheat, one way you can do that, there's a lot of like the risk factors when they list them. A lot of it's very generic, in like terms.
Mm-hmm.
You can catch a few terms, and then what I like to do when I'm like trying to go beyond like a sniff test on a company, and if I think like one of the things would be there might be a supplier in there that they're super exposed, like they only have like one person that can make the component, and it's a critical component. You can sometimes search, like Control F search on your computer, certain terms and then find that risk factor, and then you can go backwards from there too, if you're
Oh.
trying to do it quick.
Okay.
But like Boeing, I don't think that works with Boeing because like I think there's like 500 companies
Yeah.
that only contract to Boeing. Like they're not going to list every one of them.
Yeah.
No, and so many of them are private. Like
Yeah.
one of my friends is one of them. And it's a small company. It's not very big.
Mm.
So it's not like a $1 billion company. There's like tons, so many. Yeah. So they sell
And-
whatever.
And then you have LCI Industries up on your screen. I wouldn't
Yes.
own that if I wanted. Like there's no situation I think where I own that company.
Okay.
I think if it's like between the one I suggested earlier, Patrick Industries, you
Yeah.
compete with them in a sense, but not entirely. Like not all of their products are the same. I'd say Patrick is more raw material based than LCI. But LCI, the thing you'll notice if you look at the management is
Mhm.
it's like it's the great grandson or something. There's a bit of a nepotism story building there.
Oh, okay. Interesting.
And LCI in the trailer world is the second largest component supplier of general purpose trailer parts.
Mm-hmm.
The first one's owned by Bain Capital, I believe, or I don't remember. That might be wrong, but I think so.
Oh,
Or
Bain
no,
Capital.
they're
Yeah.
owned by. It's either Bain Capital or they're under the. I can't remember where they're put, but they're Brookfield somehow owns it. One of the two. I don't
Mhm.
like either of them, so I don't pay attention.
Yeah. Interesting. Well, lots of good companies for the audience to look at for sure. Anyway, well, thanks guys for participating. I think I'm gonna make this like at least a once a week live stream on Discord.
Nice. Thank you for having us.
Yeah, for sure. I'll try to schedule it in advance. That way, it doesn't just like pop up, like 30 minutes before. But anyway, all right. Thanks guys for joining, and thanks everyone for participating. I think I'm gonna go ahead and end it there.
Thank you for letting us pump our bags.
Yeah, for sure.
Oh,
So-
wait, no, I didn't want to pump my back.
I kind of did. I think I like went through like half my portfolio for a moment there.
Yeah,
No,
yeah.
That's you.
I didn't mean to. I kind of took over. Sorry.
No, that's cool. I like having participation in the voice chat for sure. Anyway, all right. Well, thanks everyone. Like, comment, and subscribe, and we will see you all soon. Thanks. Take care. All right.